streaming here. Go to Zoom. Boom. Okay, I think we are live. Welcome, everybody. It's Mark Ferguson with Invest for More, and we are trying something out brand new today. We're going live on YouTube, as you can see, and I'm with Daniil Kleyman, who is an awesome investor. I've known him many years, and I don't do these very often, interviews at all, and I especially don't do them with just anybody. So he's a stand-up guy. Love what he does. Daniil, welcome. Appreciate you stopping by.
I'm honored.
No.
Yeah, thank you for doing this. It's I'm glad I could be your guinea pig for this new experiment. So
no, it's awesome. I've been wanting to do some live stuff for a while, and I have so many things going on. Whoops, like I know you do too. And it's like you just put it off, and then you're like, hey, let's do some stuff together. I'm like, hey, this is a perfect opportunity to try it out. So glad we could do it. Yep. First off, we'll wait to see, get some people on here. But we're going to be doing a Q&A. So I have two of those set up, one kind of towards the beginning, and we're going to answer some questions we got already. So thank you guys from Instagram, from YouTube, who asked us some questions. And then we'll talk about Daniil, about real estate market, all kinds of different stuff he's doing. Then Daniil's going to talk to us about some of the cool stuff he's doing with his software company. He does a lot of online things like I do too. And then we'll have another Q&A after that where we'll look at the questions you guys send us right now. So if you have questions, you can send them in wherever you want on the chat function. Alex is next door to me over here, my nephew who works with me. He'll be reviewing those questions. He'll email them to me. I'll kind of look at them through there. So send your questions. And if you can say, hey, Daniil, or hey, Mark, who the question's for, that would be awesome too. Or we can both answer them and we can go that route. Okay.
Love it. Let's help some people,
Yep. That's the plan here. All right. First off, I want to tell you guys a little bit about Daniil. He immigrated from Russia at 12 and then came to the U.S., actually was involved in Wall Street for a number of years. Then he got involved in real estate and has been building, buying, rehabbing commercial and residential properties and doing a ton of it. And on top of that, he has his software company, Rehab Valuator. So, Daniil, you've done a ton of stuff. Like, can you just tell us a little bit, or some highlights about how you got to become so successful?
I think you're probably being far too kind. I still have a long way to go in how successful I want to get, but I guess it's all relative, right? I mean, I think I've evolved nicely from where I started, but I still have a lot of things I want to accomplish. But I think I went through the same sort of path that a lot of us go. We go to school, we're told to get a good job. I come from an immigrant family, and so you immigrate here, education is really important. Your parents tell you to focus on your studies, get into a good college. And what's the point of going to a good college? It's to graduate and get a really good job, right? So that's what I did. I focused on my schoolwork, even though I found a whole lot of ways to mess up and get in trouble. But I got into a good college. From that college, I got into a job in finance in New York on Wall Street, and it was very prestigious, and my family was really proud, but I hated it. I didn't like working for other people. I wasn't even that good at it. I got in, and I bounced from firm to firm, and I like to say I was aggressively mediocre at what I did, because it never felt like a place where I belonged. It never felt like my calling. Entrepreneurship, I think, was always, that sounds cliche, right? But it was always in my blood. Like, that's what I wanted to do. And so I worked in finance, and a buddy of mine back in my hometown was buying real estate, and I bought a rental property with him passively. I was living in New York, but I wanted to get into real estate. I read Kiyosaki. This was back in like 2004, 2005. I mean, if you've never read Rich Dad Poor Dad, it's a fantastic book. It can be summarized in an article. You really don't need to read the book, right? Buy assets. Mm-hmm. The people that get wealthy because they own assets and they own businesses, and everybody else works a job and works for their money and never truly even gets ahead. Even, CEOs of major corporations, they earn decent money, but a lot of it gets spent, and they're not investing in assets, and they don't end up actually wealthy, and they certainly don't have the time freedom, right? The true definition of wealth to me is being able to do what you want with your time. It's not how much money you have in the bank, and time freedom is the most important thing you can achieve. And so, to make a long story short, the crash happened, 2008 happened. I was working for a company called Bear Stearns. If any of you are listening familiar, you remember the history. Bear Stearns was a top 5 investment bank on Wall Street, and they crashed. They got bought out by JP Morgan. JP Morgan took over our company, fired a whole bunch of people, kept my department on, but at that point I was done. I was like, this is ridiculous. I'm not getting promoted. It's only a matter of time before they fire me, because they're going to realize that I'm like not that good at what I do. So I just stopped caring, right? I was on the trading floor all day long, and I was talking to real estate brokers in Richmond, shopping for real estate deals at the time. I wasn't even pretending to work anymore. So they finally laid me off, and I was 28 years old. And at that point I decided I'm not going to send out a single resume. I'm done. I'm going to pack up my stuff into a rental. I rented a Honda Odyssey.
Oh, nice.
And packed up like 4 boxes of my belongings. That's everything I owned in this whole world. And they moved back to my hometown in Virginia into my parents' spare bedroom. I was 28, I think I was almost 29, and I went to live with mom and dad. And it required swallowing some pride, because I was a grown man moving back in with my parents. But I was done working for other people, and I wanted to restart my life and build a business, and I started learning everything I could about real estate. I wholesaled a couple of houses. I bought a couple of rentals with my buddy that we renovated, and we did the BRRRR strategy, where we refinanced it out and just kept that money rolling into next deal. And very slowly I started building up a little rental portfolio that gave me just enough cash to move out of my mom and dad's house, right? Just enough to cover my bills. And it grew from there. And at the same time, I started a software company that really started as an accident. I had spreadsheets I was using to figure out if a deal made sense for myself. And that slowly morphed into this big software business where we serve tens of thousands of people right now. Just kind of grew organically. And there wasn't any grand vision, grand plan when I started. I just didn't want to answer to a boss anymore. I was done. And a deal at a time is how my portfolio grew and continues to grow. So that was a long-winded probably answer to a short question.
No, that helps a lot. And I think a lot of people who become entrepreneurs, like myself, just can't work for people. I don't know what it is, but I'm the same way, where you try and have a job, and it's just like you're just constantly thinking they're doing things the wrong way. You need to do this. You need to do this. You need to do this, and you can't fix it. So it's like, well, the only way to do it the right way, the way I want to do it, is to start my own company and have complete control.
And I think it's also about, I want to feel like I'm really truly contributing to the world.
Mm-hmm.
I want to feel like I'm truly creating and building something. And what you and I get to do right now is awesome. In some small way, we get to create new housing for people, create new opportunities. I know you buy commercial real estate,
Mm-hmm.
so you're creating opportunities for businesses to open in these buildings, and we get to impact people's lives. Maybe on a small level, but I wanted to feel like I was creating something, right? And now I build new buildings ground up, and that's really exciting, because we get to take pieces of land that have been vacant for decades and decades, and we get to put buildings on those pieces of land that will be around for the next 100 years, and over the course of that time, they will impact how thousands of people live and spend. Before COVID, they used to say spend half of their days. Now it's like just how people spend 24/7.
Right.
So I'm incredibly fortunate to get to do what I do, and over the last couple of years, we've been teaching other people how to get in the game, and I think especially when it comes to real estate development, it's kind of closely guarded, and there's not a lot of people teaching or sharing information about it. And so I've been putting out content, and helping people kind of get over the fears of getting into that space. And it's fun. You
No.
get to play Monopoly for a living. I mean, my God, what more could you ask for?
Right. No, and you've done some amazing things too. I know you're being humble about it, but you've got like around 150 units now, right?
Yeah.
What mix do you think those are of like commercial versus residential?
The bulk of my portfolio I grew via single family houses and duplexes before I even started doing new construction. So, it took me a while to get to that first 100 units,
Mm-hmm.
because I did it a deal at a time. I didn't syndicate. I didn't raise a lot of outside capital. So I got there very organically, and now it's scaling faster because now I just finished a 14 unit building. We're in the middle of a 25 unit building. I've got a 16 unit building that's getting ready to go to permit. I've got a 122 unit project that's getting ready to go to permit. I have land under contract for another 200 units. I'm not
Wow.
220 actually. I'm not sure if I'll close on that land yet. We're in the middle of due diligence. So,
Mm-hmm.
I think my path has been a good example of kind of taking it slow until you can go fast.
Right.
And I chose to do it that way because I wanted to learn, again, a deal at a time. Every deal I do, I learn something new that I apply to the next deal. But most of my portfolio has been smaller properties, and now we're doing mixed use development where I have corner commercial and then apartments above it, apartments behind it, and I've done a number of those projects over the last couple of years. And I love that type of development because we get to anchor the building and anchor the block with a great commercial tenant, and that becomes an amenity to the neighborhood. It becomes an amenity to our apartments in the building, our properties on the surrounding blocks. And you put the right business into your space, and it makes a huge difference for the area and for the surrounding neighborhood. So we've got restaurant, we've got a juice bar, we've got a yoga studio. We're getting ready to put an ice cream shop, real estate office, another restaurant, actually multiple restaurants into our buildings. And it's cool. It's a place where somebody's dream is coming true. They dreamed of opening a business, and now you're giving them a platform to do that. And then they're creating jobs for other people. And it's this,
That's awesome.
I don't know what the analogy I'm looking for, right? But it's
like a snowball, yeah.
It's a snowball
Mhm.
effect where you do something and it impacts a lot of other people in a positive way.
Right. No, and that's fantastic. And we do a lot of the same with commercial and residential. I have a few that are commercial and residential together, but I just love that model because one of the questions we had, and I'll ask you that now, we'll just work it into here, was what's better, commercial or residential? And to me, like, they both have huge pros and cons. To me, residential can be easier to rent, quicker, sometimes more stable. Commercial can make you a lot more money, but it can take longer to rent. What's your take on what's better, commercial or residential?
I think commercial is much riskier.
Mm-hmm.
I think commercial, a good tenant will stay a lot longer, and a bad tenant will be hard to replace. For commercial, my apartments, and I haven't had to evict anybody in 10 years. Knock on wood.
Wow, that's great.
Yeah, I mean, we build, and I'll show you guys pictures of some of the projects that we do, but we build a really high quality product, and we attract responsible, high quality tenants, and we don't evict people.
Mm-hmm.
And through COVID, we're fully collected. But if my tenant moves out, and we have situations now where our tenants are moving for a job unexpectedly,
Mm-hmm.
or they're getting divorced and they're leaving the apartment, right? I can replace those tenants very, very quickly.
Yep.
Very quickly. If my restaurant moves out, it's going to be 12, 18, 24 months before I find a new qualified restaurant to replace them.
Mm-hmm.
And it's going to cost me a lot of money, not just in how much rent I miss and mortgages I pay, but it's going to cost me a lot of money in tenant concessions I'll have to give to the new restaurant in order for them to move in.
Mm-hmm.
I'm going to help them with their build out potentially and contribute money towards their build out. So the type of deals I like are, and I haven't always stuck by this rule, but the type of deals that I like is where the commercial is no more than 10% of the leasable square feet of my building.
Okay.
That way, so I don't do, again, like we're talking about infill development where it's in a residential area and we're putting businesses into these buildings. I'm not doing strip malls.
Right.
I'm not doing industrial. I'm not doing warehouse. That's a different type of deal where the entire deal is commercial,
Mm-hmm.
right? And I don't do those deals. It doesn't mean that they're bad. I'm not knowledgeable about those deals, and it's not the type of development I do. The type of development I do is mixed use, where the commercial is no more typically than 10% of the leasable square feet. So I'll give you an example. I just finished a 14-unit building. Out of those 14 units, one is it's this 1,200 square foot commercial space. The 13 apartments were fully leased before we got our certificate of occupancy.
Nice.
So when we got our CO, people pulled up with moving trucks and all 13 apartments started paying rent. The commercial space is still vacant because I'm negotiating 6 months later after we finish the building. I'm negotiating with a potential tenant. It may be another 6 to 12 months before I start collecting a rent check.
Mm-hmm.
And that's okay because it's 1 out of 14 units. The building cash flows even without that commercial space. And it actually cash flows pretty decently. So that's okay, right? Now, if that commercial space was half of my building,
Right.
I'd be bleeding money on my mortgage every month right
Mhm.
now. If it was 25% of my building, I'd be bleeding money. So that's the type of deal that I generally like to structure. I haven't always, again, stuck to that rule. We just finished a building where it was a renovation of an existing building and half is commercial. There was no choice there, right? You couldn't turn commercial into residential. But typically, that's how I like to structure these deals, because if that commercial tenant goes belly up, I won't lose the building.
Yep.
While I try to find a replacement for them. So.
That makes sense. And we,
So, yeah.
I was gonna say, we do some of those deals you're talking about that you don't like doing as much, where we have 100% commercial, but our model has always been buying, distressed properties that are incredibly cheap. So we know, there has to be tremendous upside to buy a vacant commercial building. You can't just, hope it's going to lease in 6 months and you'll be good to go. There's got to be so much upside where you might be doubling the value of the property once you get it leased.
Yeah.
For it to be worthwhile to do that, because we do have properties that are vacant for over a year, and you know that going in, and it's just like, man, what's going on? But eventually it'll pay off. You got to be prepared for it.
Yeah, you've got to be able to write that out.
Mm-hmm.
You have to know what you're getting into, right? And right now, like, industrial is doing great.
Mm-hmm.
Warehouse is doing great. So you got to know what you're getting into. But there's specific types of deals that I do. We inherently have almost by nature riskier commercial tenants because they end up being restaurants or cafes, and I would not want to have a building where it's nothing but that type of tenant, because
Right.
It's hard to succeed, and especially lately it's hard to succeed in the food industry.
Mm-hmm. Nope.
We have a yoga studio in one of our buildings. She opened during the worst time in the history of the world to open a yoga studio. Literally, you could go back in history to the dinosaur age. Probably would have been a better time to open a yoga studio than March of 2020.
Wow.
Right? I mean, literally, her grand opening was just as lockdowns were being announced. But she, she's a hustler. She's got like these plastic shower curtain pods in the yoga studio so people can do yoga without coming in contact with
wow.
other people.
Yeah.
And she got in there and she's just making it work. And, so that's a separate conversation, but like selecting tenants is also very important, because you want to make sure you're partnering with people that, are hustlers.
Yep.
And will do whatever it takes to make the business succeed. So, but it's fun. It's awesome. When the right business is there, it makes the building better, it makes the block better, it makes the neighborhood better.
Yep, for sure. And then I'm going to work on another question we had, which kind of relates to all of this, and that's, you're doing kind of bigger deals now, commercial, residential. You start out with single family, which is what I did too. And people always ask me, and we talk a lot about this on Instagram too, like, well, I want to start with a 30-unit apartment building, or I want to start with a 20-unit apartment building. I don't want to waste my time on single family. If you were starting over again, would you try to jump into bigger deals first? Could you even do that, or how would you approach that?
If you've got the finances and you find the right deal to take down a 30-unit building, I'm not going to discourage you from doing that. What I will discourage you from doing is if this is your first deal, please don't go out and raise money and syndicate it and you didn't take other people's money to do your first large apartment building. Like, learn.
Right.
When it comes to rental properties, what's really important is management. Your money is made or lost in management. So there's nothing wrong with doing small deals if they allow you to slowly put the right procedures in place for property management, for leasing, for screening tenants, for taking care of maintenance requests. And I highly recommend you do this stuff before you pass it on to some third-party property management company, because unless you've done it yourself, you won't know how to evaluate them and hold them accountable. You just won't know, right? So starting small allowed us to put very good procedures in place that then made it easier to scale. And then as you get into bigger buildings, you will already have great leasing procedures in place. You will already have great subcontractors that can take care of multiple maintenance issues, because you get into a 30-unit building, you're probably getting a lot of maintenance requests. You need to be able to handle it. So if you can take down the building, do it, but there's nothing wrong with starting small. A lot of people are in a hurry to get big.
Yep.
I'm not going to tell you not to do it, but anything that you do, I recommend you learn how to do it yourself before you pass it on to other people. Property management is crucial. We manage properties in-house. I have my own property management company with my own employees. They manage just our properties, and they manage it based on procedures that we've taken 10 years to refine. And we deliver great service. We have great reviews, but it took time to figure all that stuff out. It didn't happen overnight. If I got dropped into a 100-unit building 10 years ago and had to manage it, it would have been a very painful learning experience.
Yes, for sure.
So, build a good team around you. If you've got the finances, go take down the 30-unit building. Don't let us stop you. There's nothing wrong with it. Just, take good care of your tenants.
Yep. No, I completely agree, and I think a lot of people I see, and we've talked about this some too, but I respect you as a real estate investor and teacher. I think you're legit, and there's some other guys out there who maybe aren't quite as real or truthful about what they're doing, but they'll encourage people to wait and not buy and just save and save and save for years and buy that big building. And man, there's so much you can learn from buying the smaller deals, or even build capital doing the smaller deals, learning property management, like you said, construction. Yep. There's so much you can learn in this business, and trying to take down a big building is not easy, right? There's so much that goes into it. And if you have the finances, if you have someone who can help you do it, great. But most people just are not in that position.
No, and again, the one thing I don't want to see you do is, if this is your first deal, don't go out and syndicate it and bullshit people that you know what you're doing, right? Because you're now responsible for other people's money. You're responsible for other people's savings. You're responsible for other people's potentially retirement plans. That's nothing to play with. And I see some of that on social media. Like, I see people syndicating deals that shouldn't.
I agree.
They should not be trusted with other people's money. That's, if you are taking other people's money, treat it as if it's your own. Treat it as if it's your grandmother's retirement savings. And if you lose your grandmother's retirement savings, she's going to have to go live under a bridge. Your grandma.
Yep.
Why would you do this to your grandma? Don't, it's not nice. Don't do that.
No.
So it's a huge responsibility. Don't, and I've seen cases where it's taken for granted, and you're dealing with people's lives. So just know what you're doing.
Yep. Nope. Agreed. All right. So great information on what you're doing, where you're at now. What about the current real estate market? You're in Richmond. It's crazy here in Colorado. I'm assuming it's crazy there too. What are things like as far as real estate?
The demand is on fire. You've got low inventory and low interest rates, which is a crazy combination. And then you add a third factor of this pandemic made people want to upsize houses and move. And so the demand is crazy, and we're seeing huge demand on for sale product, but also for rental product. You know, all the new construction product we put on the market last year and this year is getting leased much faster. Normally, if we advertise properties in November, December, January, it's crickets. Like nobody moves. It takes us a long time to lease stuff. We used to schedule our construction cycle so that we would start just at the right time in order to bring product to market in March, April, May, so that people would get ready. So that that's when people would be looking. Now we've scraped that, and we don't care, right? Because we brought new product to market in October, November, December, and listings were off the charts. So people care more about where they live now because that's where they're spending most of their time, right? They care about size and they care about the quality of the place. We're no longer in the market, I think, where you can get away with giving people crappy product because that's where they're just going to rest their head at night and then go back to work or go back to partying or whatever, right? So the market is crazy. I mean, we're not building enough.
Right, and you're doing spec homes now too, right?
Yeah.
So how has that gone? How did you transition into that part of the business?
It's always been a small part of my business. It's never been flipping houses. It's never been a big part of what I do. I've usually at any given time had probably 3 or 4 houses under construction that we sell, and I've tried to limit my exposure to only that amount. Now we're building 6 and probably have another 4 in permits, so 10, and then I've got a bunch of townhouses that are getting ready to go to permitting. So I'm scaling that part of the business because the demand is there. The demand is there, and I'm not as worried about being stuck with a short end of the stick when we bring this stuff to market, because I truly believe, and it's just my opinion, I don't think interest rates are going to significantly rise.
Right, I agree.
Anytime soon, right? There's talk today. I mean, yields have gone up a little bit over last week, and there's talk now of yields rising. I do not think that interest rates will significantly go up over the next probably year and a half. And so I believe that the demand will continue to be there from home buyers. I'm not an economist.
Right.
Don't listen to a word I say. Don't listen to my predictions. It's just how I'm running my business, and I believe that demand will continue. I don't think, if you're listening to anybody on the internet and they're telling you that like there's a crash that's getting ready to happen, and there are people that sell information, sell courses, there are people that sell whatever it is with sensationalist headlines, and it's how they sell their product. It's bullshit. There's not going to be a crash in April. There's not going to be a crash in May.
No.
There's just not.
No. And I did a video on
real estate crash. I don't know what's going to happen.
Right. Yeah.
It tanked. Like tech stocks tanked like 10% today.
I saw that. It's crazy. Yeah. No, I did a video 2 months ago, maybe 3 months ago now, on a crash, and because I worked through the last crash. I was an REO broker, so I was deep into that business, and it was so different back then. It is almost the complete opposite today. There's no inventory. Yeah. Lending is the strictest it's ever been. There's no houses for sale because they aren't building enough. And then even if the world does completely crumble and everybody loses their house to foreclosure, the average time to foreclose in 2019 was 700 days in the U.S. So it's not like it's just going to happen in 2 months. Like, it's going to take so long. And there's so many people with cash waiting to buy good deals too on the sideline.
And another difference, so there's no inventory, and then look at how much equity an average homeowner has right now, right? Now, there are some people in my market that are overpaying, and they're going to be at risk of being underwater in a couple of years. I truly believe that, right? I mean, we've got houses with 20, 30 offers on them where listing price is, let's say, $350. I heard of a house that traded last week where listing price was $350. There was 32 offers, and the winning bid was $500,000.
Oh, that's crazy.
It was in a really desirable area, but I mean, they listed where they thought the market was, maybe just a little bit lower in order to get bids. $350, and it traded for $500,000. So that type of buyer is going to be if it even appraises and closes, right,
Mhm.
which it may not. But that type of buyer will be at risk of being underwater potentially in a couple of years. But most homeowners right now have a ton of equity. That wasn't the case in 2008.
Yep.
So I don't think we're in a market that's anywhere similar to where we were, before the Great Recession.
Yep. I completely agree there. And one last thing before you really take over on
Yeah.
this. Now I forgot what I was going to say. Oh, how has everything going on with lumber and all of that impacted your new construction and challenged you on that side of it?
That's a great question. So far, the projects that we finished, we were able to lock in our lumber prices before the run up.
Mm-hmm.
I've got a $5 million project we're building now where we got hit with like $160,000 surprise on the
Wow.
lumber costs, and it's not a $5 million project. The value is $5 million. Our construction budget was 3.5, and it went up by 160 grand because of lumber. We're already in the middle of it. What am I, what am I
Right.
going to
You
do to
can't
stop the
stop. Yeah.
project? So we ate it, and we found a way to save money on railings and some other.
Mm-hmm.
I've got other projects now that are in permitting or about to go to permit where we're reevaluating it. And I think that's going to happen in general throughout the construction industry. Is some projects will get paused until prices can return back down to earth.
Yeah.
Because some stuff just will not pencil out. And I mean, that's something that, to plug the software, that's something that obviously a lot of our clients are using our software for, is to figure out, the impact on their bottom line and feasibility of their projects based on different inputs, including cost of construction, cost of materials. But it's a weird market because we have an inventory shortfall now.
Mm-hmm.
Over the last 10 years, if you look at the difference between new household creation and new job creation and new construction didn't keep pace at all. Over the last 10 years,
Yep.
we did not build nearly enough housing units, whether it's apartments or single family houses. That's still the case now, and it's going to get even worse because of lumber prices, because a lot of stuff is going to get paused. It just will not get off the ground until something is done.
Mm-hmm.
I mean, they're petitioning Biden right now to rescind. I don't know. I'm not from America. Is it resigned?
I don't know what you're talking about yet.
Rescind the tariff.
Rescind. Yeah.
Rescind
Yep.
the
Mm-hmm.
Canadian tariff.
Yep.
Right. That Trump put in place, and we're not going to get political in this call.
Okay. Yeah.
But something needs to happen, right? They need to open up more mills, which I think that they're doing. They need to bring the existing mills to full capacity. They need to open up more mills. There was an interesting Wall Street Journal article that talked about the tree growers in the South. Like, they've got plenty of trees. They're not making any additional money because of this.
Mm-hmm.
The mills are the problem. The mills are not producing enough lumber. The trees are plentiful. There's no shortfall of trees for the lumber mills. The lumber mills need to produce more. And that's going to take time to happen. But hopefully prices come back down to earth. We'll never see prices that we saw in January of 2020.
Yeah. That this is a completely random tangent question I just thought of, but I don't know if
Sure.
you can answer it. People on Instagram all the time, like from other countries, are talking about, oh, American houses are just cardboard, they'll fall down. Houses in Europe are built out of blocks and bricks and last hundreds of years. And I don't know if you go back to Russia or not or anything, or know anything about housing there, but is there a big difference between construction in America and Europe? Do you have any ideas on that?
Yeah, I mean, and I find that stuff fascinating. The difference between construction methods, even within America, if you go from East Coast to West Coast,
Yeah.
it's tremendously different, right? You go from Virginia, where I am, to California, and I'm like a fish out of water there. So the construction methods are tremendously different. I don't know if I can say what's better. We were in Ecuador a few years ago with a buddy of mine, and the way that they were building apartment buildings because we walked on site. One of our buddies was developing an apartment building there. It was just crazy. I mean, it was all concrete. It was all this crazy rebar. Literally, it's just rebar and concrete, and the building was like a tank. But it took them 2.5 years to build that building, where we can build it in 12 months.
Right.
And their cost of labor is way less than it is here. So, yeah, I bet that there are far sturdier ways to erect buildings than stick framing. Like there's gotta be, right? But there is a reason why we do it this way. It's because cost and time.
Right.
But yeah, your typical stick frame construction will probably be obsolete in 50, 60 years.
Yeah. Well, and if people are complaining about housing prices now, if you make everything block and brick construction, see what happens to prices then.
Yeah, it's much more expensive. I mean, because you don't just build out a block. If you're building out a block, you have to pour concrete in.
Mm-hmm.
That's incredibly expensive. So, there are ways to build green. There are ways to build sturdy. There are ways to build, much better than stick framing, but it costs more money, and even to stick frame a building right now costs so much.
Mm-hmm. Yep,
right. So, but I had this conversation this week with a bunch of people about, like, why are we not using metal studs? Why are we not using metal framing? And the labor to build things out of metal studs and the metal itself, you still won't save money versus lumber.
Okay.
Even, at least that's what experts told me. I've never built anything with metal studs, but I had this conversation this past week with a number of people that know what they're talking about, and the takeaway was that you wouldn't, even now with the cost of lumber where it is, you would not save any money building with metal studs, for example.
Okay. I should ask my guys, because we've done metal because we have commercial buildings where it has to be metal on some of them, and I should ask my guys if that, like, what the labor difference is, because I've never even really thought about that.
The labor is specialized. It's more expensive. The other problem with your typical metal studs is they're not load bearing. So they're more common in office environments where you're just building partition walls, which you can knock down at any given time, but they're not your typical metal studs are not load bearing. So that's another reason why they're not normally used in apartment construction, for example.
So
or single family houses. So, well, we can go down that rabbit hole. That's all.
I know. All right. Well, I think those are all my questions. That's all I had for you right now. Thank you for all the amazing insight and different stuff, and it's always fun talking to you. I know we could talk for hours and hours and hours, and we'll have more time for Q&A. We're getting all those questions now, hopefully. If you guys are wondering, we're doing a Zoom call. This is then being streamed to YouTube, so I can't see anything that's going on with questions or any of that. So hopefully there's some people actually watching this. But
yeah, I hope so too.
Yeah. So I'm going to let you take over, and you tell us about how your software and program can help investors. And I personally don't use Rehab Valuator. I'm totally honest about that, but I have gone through it. It's an amazing program. Before I promote anything or talk to anybody, I always make sure I use the stuff. And there's a ton of great features that your program has. So take it away.
Well, I appreciate that. And this won't, for me to do a full demo of the software would take a couple of hours. There's a lot. So I'll go through the highlights. And I've got a couple of slides prepared. Can you see my screen?
Yep, I see it.
And I'll run through this quickly because I think we already talked kind of about who I am. So I'll do really brief. I've got a couple of slides prepared. I'll jump into the software and I'll show you how it can help you massively. We currently serve thousands and thousands of real estate investors, whether it's wholesalers, house flippers, landlords, developers, people doing small ground-up projects all the way to large apartment buildings and commercial buildings. We help every segment of the market, and I'll show you guys some highlights. And if anybody wants to sign up, because Mark was gracious enough to host me on this call, when I'm done with the demo, I'll give you guys a massive discount, but that discount is going to be very limited time because we don't typically discount our software, but it's going to be a great deal. So if you have any interest in this, I would stick around. So again, my name is Daniil Kleyman. I'll run through this really quickly. Full-time investor since 2009. Right now, I own a portfolio of about 150 units, including single-family duplexes, quads, multi-family mixed-use buildings, including, like we talked about, restaurant, retail, It's not syndicated, right? It's a portfolio that I own for the most part without outside investors. I've got another 150. It's more than that now in the pipeline, ready to go to permit. So right now, I'm all about building cash flow. My business right now is mostly all about building long-term assets and building residual cash flow. And I want the mailbox money, but it's not really mailbox money because now it comes via our property management software. It gets all the deposited into our bank account every month, right? Build most of my portfolio using BRRRR, buy, rent, rehab, or buy, rehab, rent, refi, repeat. It's a great strategy, and we have some free training videos on that topic. Focus mostly on building to rent, and we also build 5 to 10 houses a year as well that we sell to owner occupants. It's not a huge part of my business right now. It's going to be more than 10 houses, given the crazy demand, but it's not a huge part of what I focus on, right? And this is the typical sort of infill development projects that we do. This is a duplex that I just finished. 4-unit building. This is a 6-unit building that we finished recently. You were talking about, better construction. This was all brick, and it costs a lot, but it's going to be a lot less maintenance for a long time. This is a 14-unit building that I just finished with you can see the commercial space in the corner right there that we haven't leased out yet. And that's the back of it. This is the building, Mark, that I was talking about, where half is commercial, right? The entire downstairs. Okay. This was a historic renovation that we did. This is a building that is 100 plus years old. It was severely neglected. We basically built a building inside the building, right? We had to reinforce every single wall. We had to redo the entire foundation, sister every joist, sister every stud. So we basically framed up a building inside the building. And downstairs there's a juice bar, a yoga studio that we were talking about. And then upstairs are 4 really, really attractive high-end Airbnb apartments.
Oh, nice.
Really cool project. But after a very expensive renovation, the building, you can probably see in this picture, the building still leans. To remove that lean would have literally required a crane to try to push the entire building, and there's no guarantee that it would have worked. So we structurally stabilized this building. It's bomb proof. It still leans. So I named the building Eileen.
Nice.
And so and then I bought the rest of the block, and now we're developing the rest of the block as we speak into a mixed-use building with 5,000 square feet of commercial and 21 apartments. And so that's what it's going to look like. You can see it right there. Wow. It's very close to downtown, and there's going to be a restaurant here in the corner, ice cream shop, and then a couple of other businesses, and then 21 really nice high-end apartments. So this is the type of projects that I love, and it's just a ton of fun.
Can I ask you a question real quick?
Yeah.
How do you find your land? Is it usually listed? Is it off market? How important is it that you find the right land?
Some land I bought was listed on LoopNet. People just didn't see opportunity there. Some came off market to me through wholesalers, through pocket listings from agents. Some of it came from local tax auctions. Some of it came through my own direct marketing to sellers, which I don't do a lot anymore because it's time consuming. But a lot of the past projects that I've done was I just sent direct mail to owners of specific lots. So every which way, you have to constantly employ multiple ways of sourcing deals because you really can't rely on one.
No, thank you. All right, go ahead.
Sure. This is a 8-unit building that we're moving people into right now. This is 4 duplexes side by side, basically. Really cool project. 12-foot ceilings on the second floor, just crazy kitchens with quartz countertops. And then this is the 120-unit building, 122-unit building. I'm getting ready to take the permit, but we may hold off given where lumber prices are because it may not pencil out, right? So this may take, instead of a year to break ground, this may take 2 years to break ground. That's going to be my first swimming pool, so that's pretty cool.
Oh, that's cool.
Yeah. These are some townhouses we're getting ready to build. This is going to be a for sale product, all brick, but what we're going to charge for these townhomes will justify the cost of doing brick. It's going to be a very beautiful project. So, and these are the interior finishes that we use in our rentals. So again, I focus on the higher end of the segment. We do really nice kitchens, really nice hardwood floors, stainless steel appliances, wine racks in the kitchen, either quartz or really nice granite countertops. big outdoor spaces. I started doing outdoor ceiling fans recently, which like nobody in my market does. People love it.
Nice.
Nice baths, uh, lots of storage, lots of room, walk-in closets, et cetera, et cetera. So this is kind of the typical. My rental product in my market is nicer than 90% of the for sale houses. And
No, that's very nice.
intentional, right? Because we lease it very quickly, and we keep tenants, and like I want to take pride in what we put into out into the world, right? I mean, I want people that live in my buildings to have a great experience and to truly love where they live. And like stuff like this is fun because we will typically start leasing new construction properties. We don't wait till they're done. When drywall is going up, we start walking people through. And so oftentimes people will sign leases when the drywall stage is not even finished. And we're able to do that because we can show them pictures of previous projects that we've done, and we can tell them this is what finishes are going to look like. But it's a lot of fun to be there on the day when they come to pick up the keys and move in, because the last time they were here was when it looked like a war zone. And it's really cool to watch people walk into their rental unit on the day of their move-in, not having seen it for 3 months, and just go. And now when they're walking in, it's cleaned. We have professional cleaners there. It's spick span. It's picture perfect. And they walk in and they see the finishes and they see the final product. And they were nervous on the way there because they're like, we signed this lease months ago when they were in the middle of construction. What is it going to be like? It's fun to see their expressions when they walk in, and they see the final product, and they're just blown away, right? And it's something I take a lot of enjoyment in.
Oh, that's awesome. How involved are you in the floor plans and design? Do you have an architect who does a bunch of it, or are you doing most of it?
We work with a number of different architects, and I'm very involved with the floor plans, with the finishes, and with almost every stage of construction.
Cool.
But I don't GC my own projects anymore. I have a general contractor that builds most of my stuff for different general contractors, but I'm still very closely involved, especially with the layouts and with the finishes that go in there.
Okay, cool.
Yeah. And in our Airbnb stuff, we hire interior designers, like
nice.
really good interior designers to pick out finishes and furniture and art and all that stuff.
Very cool.
So the software business, started because I needed tools for myself in my business, and it grew into something that over the last 10 years has helped tens and tens of thousands of investors. And so who we typically help is if you're a wholesaler, and I don't know how many wholesalers you have kind of in your audience or that are watching this, but if you're a wholesaler, you can, and I'll show you how this works. You can use our software. You can instantly pull up property info, owner info. You can pull up comparable sales. You can determine what the property is worth. You can determine the after repair value. You can estimate your repairs, figure out what to pay for the deal, and then you can create really concise, super easy marketing flyers to get your deals sold very quickly. You can syndicate them to social media. You can text them to your buyers list. You can just put them into Facebook groups if you don't have buyers and sell your deals instantly. And you can build your cash buyers list that way. And if you're a rehab or if you're a developer, again, you can figure out what to pay for deals. You can create detailed renovation budgets, construction budgets. You can create cost templates for yourself where you will save unbelievable amounts of time in estimating costs on the project going forward. You can raise money for your deals, short-term financing, private lenders, permanent financing. There's a full project management suite where you can create Gantt charts and schedules of your projects. You can track with in-app accounting all your expenses, track where you stand in real time, and generate real-time reporting. And if you're brand new, we have a ton of tutorials, ton of content. If you're doing a lot of deals, you will immediately see the value in what I show you, and things are going to click for you, right? So what this is not, we don't do everything. We're the best at what we do, but we leave other tasks to other people. So this is what I mean. This is sort of the path of the deal, right? Especially if you're a wholesaler and you are marketing yourself for deals, we don't sell you seller leads, and we are not a CRM, right? There are other solutions out there that specialize in that. We come in at the lead stage, when you have a lead and you need to analyze that lead and then put the property under contract and then sell it if you're a wholesaler, or raise money for it if you're a rehabber or you're a builder, and then manage your project, that's where we take over and that's where we help you, right? So this is kind of everything that comes with each step, right? So be aware of the sort of the solution that claims to do everything for you, because they rarely do anything very well. We're not an all-in-one solution, but when you're at the lead and deal analysis stage, you don't need anything else other than rehab valuator. Right? So if you're a wholesaler, we help you with your due diligence offers, and then marketing and selling your deals. And then if you are a rehabber, if you're doing house flips, if you're building, doing BRRRR, doing rentals, doing new construction, this is what we help you with. Due diligence, figuring out what to offer, raising money, right? The funding presentations that our software generates have raised tens and tens of millions of dollars for our clients. And then the project management. So let me jump in. I'll do a quick demo. And if you guys have questions, Mark, where are people putting questions? Into
the chat. They can list questions, and Alex is still posting them here to me. And I think I can see them. If you see me looking down, I'm looking at my phone at the chat, so I can see it now too. So yeah, okay. Ask questions, and we'll get to those here soon.
Yeah, and I'll do a demo. Again, it's going to be impossible to kind of show you guys everything that the software does, but I'm going to do a quick demo, and then we'll do Q&A, and I'll stick around as long as need be. But so when you log into the software, this is the screen that you see, and so you're going to click Start New Deal, and this window is going to pop up, and you're going to type in cosmetic flip on 37th Street, and then you're going to put an address here. All right. And then you're going to click Get Data. And all of this info on the right will populate automatically for you. You can immediately see who the owner, and this pulls from public records. So if it's recorded, we will get it. You can immediately see who the owner is, the mailing address of the owner. You can immediately see that, hey, this is an LLC, so it's probably an investor. Mailing address is not the same as the property address. That also tells you it's an investor. You can see tax assessment, what it sold for last time, right? It sold in 2012 for $44,000. Bedrooms, baths, square feet. It's not owner occupant. You can see zoning. So immediately you know who the owner is. You can contact them. You can see that, hey, this thing is assessed for $200,000. It was last sold for $44,000. There's probably some equity in this deal. So you're going to click Save. But just now I saved you probably 20 minutes of research, right? With just that one feature. And then you're going to click here and you're going to click Comparables. And the software is instantly going to give you comparable sales. And we pull hundreds in the background, and we're going to give you the 25 that we feel are the closest in location and size. And you can see them here in the map. Now what you can do, and instantly it's going to average these out, and based on the square feet of this house, it's going to give you a ballpark after repair value. But now you're going to use these filters, and you're going to say, okay, well, this is a 4-bedroom house. I only want to look at 4-bedroom houses. So you're going to drag and drop this filter, and the map is going to adjust. And then the comps here are going to adjust as well. Now you still have 25 because we pulled from the bucket, the bigger bucket of the comps. But now you only have 4-bedroom comparable sales. Maybe we want to narrow down square footage to get closer to this type of property. You're going to drag and drop square feet, and now you're down to 9 comparable sales. And then you can filter them further, right? So I'm going to check this box, and I'm going to get rid of anything under 150 bucks a foot because I know this market, and I'm looking for the after repair value. What is this going to be worth when I'm done renovating it? So I've got these 3 comps checked, and I can see immediately that the after repair value based on those 3 comps is about this much. And I'm going to click Use ARV, and I'm going to populate this into my after repair value. And then I'm going to ballpark, I'm going to ballpark my repairs. Now I can just ballpark it and say repairs are going to cost me about 30 bucks a foot, so $60,000. And I'm going to enter my sale price here. And now I can back into my offer. If I pay $145,000 for this deal, what is my ARV going to be? 59% plus 7, 66. So I can afford to pay, let's say, 160 for it. Now I'm at 70%. You see 63 plus 7 to sell. So I'm going to offer $160,000 for this deal. Now I can see that if I put it under contract for 160, I'm going to make $102,000 as a profit. So now let's say that I am a wholesaler. What I'm going to do is I'm going to click reports, and let me show you what I've got this already built out with all the pictures. So let's go back to my deals. Let's say I'm a wholesaler and I want to sell this deal. Now, what most wholesalers do is they will post on Facebook and they will say, I've got a deal in the zip code, DM me for more info, or some ridiculousness, right? Like that, right? Like, what a waste of time. Or they're going to call their buyers and they're going to say, hey, I've got a deal at 1218 North 37th Street. I want $164,000 for it. Instead, you're going to click reports and you're going to click marketing sheet, flip, exit. And you're going to generate a flyer that looks like this. You're going to click get unique link, and now there's a web page that you can text, or you can post on social media, or you can email to your buyers list. And when they click that link, this is what your buyers will see. This is what they need to see. Hey, I'm asking $164,000 for this deal. This is where I have ballpark repairs. This is going to be your total cost basis. Here's the projected resale price. Here's how much money you're going to make. Here's some pictures, right? So now you've just massively shortcut your buyer's ability to do due diligence in this deal and figure out if they should pursue it or not. Or you can go here and you can put this directly into Facebook groups. So if you want to sell this deal and you don't have a single buyer on your list, now it's not going to let me log in because I have two-factor authentication, right? But you click this button and you can put this deal into every local Facebook group there. And you will sell this deal instantly if it's a good deal, right? Or you can click reports and click full presentation for flip and generate a 5-page presentation that looks like this. Now I'm going to show you the funding presentations in a second, because if you want to raise private money or if you want to get credibility with banks, you're going to like that. So this is what your buyers will see, including a comparable sales report. And here's a page with some additional pictures so they can assess the condition of the property. So if you are a wholesaler, you massively stand out from your competition. You're saving a ton of money for your buyers. If you're brand new to wholesaling and you're worried about finding buyers, forget it. You don't need to worry about it anymore, because you can literally click syndicate this to Facebook and put it in every, let's say you're in Denver like Mark, you can put it in every Denver real estate Facebook group. If it's a decent deal, you will sell it immediately. You don't need to have a single buyer on your list. Does that make sense, Mark?
Yeah, no, and those reports are so nice because I buy a ton of deals from wholesalers, and most of them are like, hey, it's a 3-line email, and I'm doing and I don't mind doing the work. I still confirm all the numbers anyway. But you're always confirming, okay, are these really the repairs that are needed? Is this really the ARV? Is this really... And just having, the wholesalers I like to work with best, they have their own app they create. It's crazy. But you can go in there, see all the pictures, all the numbers, and they're real. And it makes it so much nicer. And then once you build some rapport and people use you a couple times, you're like, okay, I can actually trust their numbers now. And it just makes life much easier. And then, yeah, as far as your funding... presentation. That's an awesome presentation. It's so valuable. So I'm looking forward to that one.
So let me show you that next, because literally our clients, and I don't know what the true number is. I know it to be tens and tens of millions of dollars in just private funding that they've raised. Let's say this is a deal that you want to buy yourself, right? You don't want to wholesale this. You don't want to let your cash buyer make all the money. Now, before I get to that, this is the flip exit strategy. You can do the same thing for hold, for rentals, right? Whether you're wholesaling or doing your own deals, you can click this tab and there's a hold. And you can enter apartment buildings up to thousands of units here, right? And if you're doing BRRRR, you click, yes, I'm going to refi this into permanent financing. So if we have time, I can go through that. But let me show you, let's say this is a house that you want to buy, rehab and flip. You're going to click financing, and you're going to say, yeah, I want 100% of my total project costs from a private lender. And I'm going to pay 8% interest rate. And you're going to click reports, and there is a separate set of reports here for lenders. So you're going to click private lender funding request. Well, let's do the full presentation for private lender. Let's do that instead. And you're going to click generate. And so now you're going to send this to your private lender, and they're going to give you money because you've just shown them that you know what you're doing. Right, so they're going to see a cover page, an executive summary, and then here you're speaking the language of your lender, right? Your buyer wants to know what their percent ARV is going to be and how much money they will make. Your lender wants to know what are they going to earn. So, hey, Mr. Lender, I'm looking for a total of $238,660, but hey, that's only 70% of the after repair value. I'm going to pay you 8% interest rate, and this is what you're going to earn. Here's some pictures. Here's some comparable here's a cash flow summary that shows you exactly how your money will go out and how your money will come back in, right? Here's your comparable sales report. And obviously, you can include way more than 2 columns. I just have 2 columns here in this example. Here's some additional pictures where you can see the property for yourself. Hey, this is your opportunity to participate in a restoration of a historic 4-square property in one of the oldest neighborhoods in the country. We're going to bring this thing to life. We're going to make it beautiful, and we're going to sell it to a family that's going to live there for the next 30 years and raise their children, right? Like, your lenders should care about that stuff. They want to participate in these kinds of deals. And now, just by sending them this presentation, and there's additional pages here where you can include more pictures, you're allowing them to touch and feel this deal, right? You're allowing them to see pictures, but you're also showing them, hey, what's in it for me? What am I going to make? Now, you have full deal structuring flexibility, which is awesome, because you can go in here and you can say, oh man, Mark, you're a tough guy to get excited. So how about this, Mark? What if I can see here you're not excited by 8%.
No.
So how about this? Yeah, I didn't want to do this, but how about we throw in 2 points? And you know what? I will also give you a 20% profit split, because you know what? If you're going to give me 100% financing, this may be my first or second deal. You're going to put a lot of faith in me. I'm going to make it really worth your while. And I'm not teaching you guys to immediately start by offering people profit splits. Right. I want to show you the deal structuring and flexibility you have here. So now, Mark, what if what I gave you looked more like this? Let's go here. What if what I offered you looked more like this, Mark? Where I paid you 2 points, 8% interest, and gave you 20% profit split. So now, this is what you're going to make.
That's a lot better. I like that.
Would that be okay?
Yeah.
Would 21% return on your money get you more excited about this?
Yes.
Or I'll tell you what, how about this, Mark? You know what? Let's align our interests. How about I don't pay you any points? I'm not going to pay you any interest, but we're going to split the profits 50-50. We're going to do a real joint venture here. Now, this is what you're going to make if everything goes according to plan, right? Because we're now 50-50 partners with 31% cash on cash.
I like it.
Interesting for you?
Just don't mess up the deal. No. But no, that's awesome. You can do the different layout and different percentages and everything. I just wrote an article on working with partners on my blog. And yeah, I mean, that's really cool to be able to see, hey, not just for the lender to see what they're making, but for you as the investor to say, oh, if I offer equity, here's what I'm going to make, here's what I'm paying. If I offer an interest rate, here's what I'm going to make, here's what I'm paying. And then you could even like tweak the profit numbers to say, hey, what if something does go wrong and I don't make as much money? Then what will those costs be too? And it kind of gives you a lot clearer idea of what avenue is better.
Well, so what you can do is, I didn't show you this feature, but you can take that deal and you can click clone, and it'll create another copy of that deal. And then you can run a different scenario there, and then you can clone it again without having to start over, and it'll just keep cloning that deal for you, and you can run different scenarios for your lenders. So now, we do the same thing to structure construction and permanent loans from banks, right? So I showed you guys a picture of the 8-unit property that I'm finishing. This is the live deal. This is what I generated for my local community bank in order to get almost over 90% of my construction funded, I think, right?
Oh, hey, I had a good question. Is this software good for any market in the U.S.?
Yeah, so the first thing I showed you guys is the data, right? The public records for the property and comparable sales. We pull from public records. If public records exist, we will typically be able to get that data. I would also say that the data is something that we just added a couple of months ago. It's not the central point of our software, right? It's a value add to our users. The stuff I'm showing you now, the deal analysis, marketing reports, lender presentations, that's really what makes our software unique. The project management, which I haven't even showed you yet, it's insanely powerful that we just released. So the data is good, but there's going to be counties that don't record. There are places in New Jersey for some reason that don't record bedrooms and baths. There are non-disclosure states that don't record sale dates, sale prices. There's not much we can do there. I am working on getting MLS data into this thing. So when we're doing this call next year, Mark, if you bring me back on, I may be showing you MLS data around the country in this software.
That would be cool.
But our data is as good as county recorders.
Okay.
If that makes sense.
Yep.
Right? But again, the data is a value add to our users. It's not the central point of our software. Data is a commodity. There's a lot of people out there that sell data. Mm-hmm. It's something that we're investing money into for our users without charging them extra. If that makes sense.
Yep.
But so this is what I sent to my local community bank to get a construction loan that turned into it automatically rolls over into permanent financing when we're done with construction, right? This is what I sent to them. And literally, this is how I raise millions of dollars for my banks. I literally send them architectural plans and these presentations. And this is how I got $800,000 to build these duplexes. And so I'm able to show my lender, this is what the property is going to be worth. This is what we're going to use. This is what it's going to cost to build it. This is going to be the income when it's leased. And this is going to be the amount of permanent loan and what the debt coverage ratio will be of this permanent loan when you give it to us. And this is your operating income and expenses report. This is the pro forma that you can generate inside the software where you can tell your lender exactly what your projections are for income and expenses when you've done with construction and you've moved people in.
Wow.
And if they don't get something like this from you for larger deals, you're gonna have to put this together one way or another. You can do it in Excel, right? Or you can hit a few numbers here and enter this in seconds, right? You want to enter your expenses monthly, annually, dollar per unit per year. You can export all this to Excel. So this is a project that I'm finishing now. And so the last thing I want to show you guys, because I know we've been already talking for over an hour, and I want to respect people's time, and I want to, anybody that's watching this that wants to get the software, I'm going to give you a great deal. But I want to show you the project management piece, right? For serious investors, this is invaluable. So first of all, with this software, you can build completely customized, detailed budgets and scopes of work. This is completely customized. But if you're brand new, you can preload one of our existing cost templates here, right? So if you need a starting point, we give you this is a single family rehab template. This is a new build multifamily template. This is a new build duplex template. As you do these projects and you build these budgets, you can save these yourself as templates. And this massively shortcuts your ability to estimate repairs going forward because you don't have to reinvent the wheel. When I start, so let me show you how this works. Let's go here and let's start a new deal. So let's say, Mark, let's say I am getting ready to build a new duplex. I'm going to click this rehab budget and I'm going to click detailed input. It's like, oh man, do I have to start this from scratch? Like, what do we do when we build duplexes? I have to do site work, right? Like, no. So instead, I'm going to click template, and I'm going to click load template, and I'm going to click Daniil's new construction duplex template. There we go.
Nice.
I'm going to update my numbers here. This is 2,500 square feet. I'm going to update my shortcuts here, my quantities, right? How many squares of siding is there? How many squares of roof? How many units? And I'm going to update a few numbers here, and I'm going to go down this list, and my budget is done, right? And we offer detailed project management training, by the way. We just did a deep dive project management webinar that went like 3 hours where we just talk about this. I can go in here and I can store all my bids. I can store all my bids here. So this is a live deal that I'm doing. Let me show you, and I'm going to go through it fast, but if you are a rehabber or if you're a builder, you'll see the value in this. This is the 4 duplexes that I'm building now. I can store my bids here. I can search for them here. I can build my project schedule visually. I think I'm showing you guys the wrong deal where I don't have the schedule built. Let's go into the right deal. Well, because I want to show you what the schedule looks like. And we just released the project scheduler. Mark, have you ever had to do rehab or construction lender draw requests yourself? Request money from a lender?
Yeah, for some hard money stuff, they're a pain. I almost just end up not doing it.
So it wasn't fun for you?
No.
You want to see something cool? You said you weren't using the software yet.
I know. Now I'm wanting to.
I think I'm going to show you. So first of all, we just released this, right? But now you can visually lay out your entire project schedule, and you can update it. And it's so easy. Literally, a 5-year-old can do this. There's in-app accounting here, which we don't use QuickBooks. We use this. Every time I pay somebody, it's a line item here. I cross-reference it to some line item in my budget, so I immediately can compare budget versus actual. I can upload all my invoices here, right? And everything is searchable. So I can click here. Here are all my files. Everything, of course, there's no frame. That's how it always works, isn't it?
Right.
So, lumber, plumbing, whatever, I can search for it here. If I just want to look at receipts, I can look at receipts. If I just want to look at bids, I can look at bids. As I enter my transactions, I can click on track view, and I can immediately see where my project stands. During the project, it tells me who I've got left to pay and whether I have a cost overrun already. At the end of the project, it lets me know where I ended up and where I went under budget or over budget. But let's look at it as an example. I can look at this and I can say, I'm already 12 grand over budget on framing. How the hell did this happen? Right? You see this?
Mm-hmm.
So I'm going to click on this. This is every time I've ever paid somebody for this cost category. Everything is at my fingertips. I can go here and I can click and it immediately takes me to this, and if there's an invoice there, I can look at the invoice. But let me show you the draws. And by the way, everything can be exported to Excel or PDF. All right, you ready for this, Mark?
Mm-hmm.
Okay, so I've got my budget built, right? I'm going to go here and I'm going to say sewer is complete. This is complete. Oh, we got to fix that. This is complete. And this is complete, right? And I'm going to go down the list. I'm going to say framing, complete. This is complete. This is maybe 50% complete. And I'm going to go down the list and say, okay, for this draw request to my lender to reimburse me for this portion of the construction project, the rehab project, these items are complete. Okay? And then, so this is the difficult part. Are you paying attention?
Mm-hmm.
This is really hard, so I want you to remember this. You click this green check mark. And it generates an AIA compliant funding request for your lender. This is the budget to fund. This is what we've already funded. This is what remains. Right? This period column is, you scroll down, and this is what you're requesting to fund right now.
Oh.
How long did that take?
2 seconds of clicking the green button. But
Yeah, and so then
That's
they
awesome.
send you a bunch of money, then you do a bunch more work, and then you go and you click draw number 2 and you do it again. And it stores your history here, which you can then export into Excel, or you can export into PDF, and you can store everything. You don't have to export it, but if you want to. I built this for myself because if you're running, like me, 7, 8, 10 construction projects at the same time and you're having to do these draw requests, it's a nightmare.
Right.
Well, not anymore.
Nice.
And so everything is here at your fingertips. Reporting, I can create, detailed construction or rehab reports that show me, again, my budget, my variance, what at the end of the project I can look and I can say, all right, so these are real numbers, by the way. I went crazy on these kitchens.
Okay.
You want to see? I know you told me your audience loves to see.
Yes, they do.
This is the 4 duplexes that we're moving people into right now. I went crazy on these kitchens. It's the most quartz we've ever done. Let me see if I can show you guys a good picture. We had professional photos.
Oh, wow.
done. So. Oh, and that's the other tip. Like, if you're doing rentals, even if you're rehabbing, when you're done, before you move people in, have professional pictures done. And then next year, when you're
still got 'em.
marketing these for turnover, use these pictures. Don't use the picture that you took
With all their
on your
stuff in
site
it.
visit with your tenants, like dirty underwear on the floor.
That's what my property manager did.
That's such amateur hour.
I know.
We've never had anybody complain about, about us using pictures
Right.
that are not.
The exact, yeah.
Yeah, you pay for these pictures and you can use them for years in your marketing. But so these are the kitchens that we did. I want to show you the upstairs units. The upstairs units are unbelievable. 12-foot ceilings. Yeah. Check this out.
Those are cool.
Yeah, 12-foot ceilings, huge kitchens, huge islands, right? We do wine racks. We do really nice hardwood floors. We did 2 ceiling fans. You saw that?
Mm-hmm.
It's little stuff, but it just creates a better living environment. A lot of quartz. This is the most quartz I've ever done per apartment.
That's cool.
And then the bathrooms also, like, so if you look at the bathroom, we used 48-inch vanities. Like, nobody does that, but 48-inch vanity, a couple can live there comfortably.
Mm-hmm.
So here, I want to show you a good picture, and then we can move on. Come on. And like really nice granite. It's little things, but they make a difference, right? So I mean, we got top dollar for these rentals. Probably could have gotten even more, but I mean, these are they leased up incredibly fast. So that's that. But I digress. Here, let's see if there's a good. Yeah, so that's the kitchen.
Nice.
Anyway, there's a lot here that I haven't shown you in terms of what the software can do, but I also don't want this call to take 17 hours. So let me, and it's hard because we can't see comments.
I can see them now.
I don't know if anybody is like, I want to get this, I care, I don't care, but you should care, right? Because if you are a wholesaler or if you are a rehabber or if you're a builder, this will save you a huge amount of time, help you raise a ton of money, help you sell your deals if you're wholesaling. So, you know, if you want this software, right? Or if you're watching this and you're like, I need it. And by the way, before I tell you the special price that I'm going to offer only on this call to Mark's list, because again, I want to give you guys an incentive to take action today and to sign up, right? I don't mind giving you a discount if it means we're going to create a long-term relationship and you're going to be a client for a long time, but we take insanely good care of our clients. We have perfect reviews online. We've been in business for 11 years, and you won't find a bad review of our products or of our software, of our customer service. We take amazing care of our clients. We have full-time American-based support. They sit in my office and they answer phone calls, they answer emails, they hop on screen shares with our clients, and they help you with whatever you need, right? In addition to the detailed tutorials and live webinars, training webinars that we do on a regular basis.
And you've got a Facebook group with tons of information. Yep.
Yeah, we've got a Facebook group with over 11,000 people right now where you can network with other investors. And again, you're not signing up for the software, you're signing up for a community, and you're signing up for a product that has tremendous support behind it, and something that I am very passionate about, right? So again, if you go to Better Business Bureau, we have a perfect A+ rating, 5 out of 5 star rating, nothing but 5-star reviews. We've helped a ton of clients over the years, you know, to either raise money. I mean, Spencer raised $2.5 million worth of funds for, and you're not going to pay $49 a month if you sign up on this call. Tim closed 3 wholesale deals. Melinda picked up our 3rd property using Rehab Valuer today. You know, I have so many of these testimonials, and we've helped so many people, and it's really rewarding to be able to contribute to people's financial freedom, right? Which in a small way we're able to do. So I have hundreds of these. I'm not going to bore you guys with them. Michael says, helped us tremendously when we started. We would probably never have done our first deal, but we're on track to close 50 deals. Like that's freaking awesome. You know, I'm very proud of that. So here's a special offer. If you're watching this, I'm only gonna make it available on this call, and it may still be around for a little bit, because I know Mark wanted to send the replay to some people, but I highly suggest you take advantage of this as soon as possible. This software, if you go to our website, is normally $49 a month, which is
still a good deal for everything you get.
It's still affordable.
Yeah.
It's still absolutely affordable, but if you sign up today, you're gonna pay $297. We're gonna wipe out all your monthly payments, and you're gonna pay $297 for the entire next year, which saves you 50% over paying monthly. And then after the first year, if you stay, and you're always welcome to cancel. I don't know why you would, but we're very easy to deal with, and it's very easy to cancel your subscription if you want. But if you stay with us, then the second year it becomes $397 a year thereafter, which is still a 32% savings versus monthly. So you save the first year big time, and then you save every year thereafter versus what monthly users pay. So if you go to rehabvaluer.com/Mark, it's very easy to remember. But if you're watching this, you won't be able to click on the link on the screen, so you need to type that into your web browser.
I think I put it in the description below the video if I did it right. So it should be there for people to click on. Assuming I did it right. I think I did. So
okay.
It should be there. But yeah, that's pretty easy to type out anyway. Nope, it should be right there.
rehabvaluer.com/Mark. It's going to take you straight to the order form. Fill out that order form, and we're going to instantly send you your login credentials for the software. And again, when I said when you sign up for our product, you're not just signing up for a software, you're signing up for a product that has tremendous support behind it in the community of investors. We also are very big on education, right? So like Mark has by the way, I have to this day, and I've known you for a long time, I have absolutely no clue how you pump out so much content. It's mind-boggling to me how much information you put out there. It's absolutely unbelievable.
Well, thank you.
So Mark has this incredible knowledge platform, and it's something that we also strongly believe in. So we put out a lot of software training and a lot of supplemental training on just how to be a real estate investor, and you get a lot of stuff when you sign up for the software, right? So first of all, the software capability, you get full deal analysis capability, instant owner and property data, nationwide, comparable sales, ARV calculator, wholesale deal marketing, social media syndication, private lender and hard money lender funding presentations, bank funding presentations, full project management suite, and you get kick-ass support, right? So, but I'm also going to give you a bunch of bonuses. We give you a full contract package, purchase, wholesaling, private lending, legal contracts that you can take and basically run with. We still advise you to talk to a good local real estate attorney in your state, right? We give you templates. You no longer have to pay an attorney to create these from scratch, but you should always be using a good local real estate attorney. But these are just some of the contracts that you get instantly in the bonus section. There is a interview here. This is great content on deal negotiation. Mark, you ever heard of Chris Voss? He wrote Never Split the Difference. Great book. So I did this like hour-long interview with him where we break down techniques for negotiating real estate deals. Really cool. So you get instant access to that. There's a 3-hour real estate investing masterclass. That's like a course in itself that you get instantly. We cover wholesaling, raising private capital, project management, and wealth building. That's right there. Real estate owned template, which is what I use myself to organize my real estate portfolio and present it to my lenders. When I apply for loans, they want to see what real estate I already own and what my balance sheet looks like. And this is a template that I use every time I ask for money from a bank. They request this. And then there's 2 special bonuses which are invaluable. There's a 5-hour-long 5-part deal sourcing masterclass. If you need to find off-market deals, there's 20 plus methods that are covered in this masterclass. We originally did it for our inner circle members. You get instant access to that. And then there's a second masterclass here on how to buy your first rental property. We talk about multiple ways to buy rentals without needing a lot of your cash, right? That's what's stopping most people. But we cover creative financing techniques subject to seller financing, et cetera, we cover lease options. There's a lot of different ideas here on how you can start building an asset portfolio now rather than waiting until you save up some money. And I can personally tell you that don't wait to build a rental portfolio.
I agree.
Don't wait. Don't put it off for 5 years until you save up some dough or until you've done some wholesale deals and you feel comfortable. Even if it's just one house. Find a way to start building a portfolio now. Build your recurring monthly cash flow.
Yep.
It's invaluable. So again, and the software comes with a full 30-day money-back guarantee. We stand by it. It's unconditional. And so again, go to rehabvalidator.com/Mark. Take advantage of this. I'm not going to keep this link around very long. I'm going to shut it down because we don't normally discount our software. I'm doing this because I like Mark. He was kind enough to bring me on and speak to you guys. And it's a tremendous deal, but I'm going to shut it down. So go and take advantage of this.
Awesome. Well, thank you, Daniil. You have more? Sorry.
Yeah, this is all I have. Let's do Q&A. And whatever way we can help people on this call, I'm game. So
cool. No, we have lots of questions. I'm going to cheat and ask my first question from me first. Now, I don't know if you can do. You don't have to do like a detailed analysis. How much does it cost to build like 1,000 square foot per unit fourplex right now, ballpark? This is not fancy like yours. It's like more basic.
So it's going to vary by market, and it's obviously going to vary by finishes. And now with lumber costs where they are, everything's gone up. It also goes up quite a bit when you go from residential construction to commercial construction. So I showed you pictures of this 8 units I just finished.
Mm-hmm.
And I have a full training on that particular project, a big case study. But there, we built. If you look at the building from outside, it looks like a fourplex, but it's actually 2 duplexes side by side attached.
Oh, okay.
On separate lots. And I went through a process to be able to do that and subdivide those lots into duplex lots. But that process allowed me to build each duplex by residential code.
Okay.
So from the outside, there's no difference. It looks like a quad. But legally, it's on 2 separate lots and they're simply attached. But doing that allowed me to not do sprinkler systems, not do fire monitoring, which you have to pay on. Not only do you have to pay to install the fire alarm system,
Mm-hmm.
but you have to pay, it costs us between paying the monitoring company and paying for fiber lines. It costs us over $200 a month just to monitor the sprinkler system.
Wow. Okay.
So you save a lot of upfront costs in your construction, and you save a lot of operating costs by doing residential. But once you go to construction by commercial code, your dollar per foot goes up tremendously. I mean, I've done estimates before, and I mean it probably goes up easily $20 to $30 a foot.
Okay.
There's a lot more that you have to do by commercial building code. So I don't build quads anymore because it's not worth it. There's not enough units to amortize the additional cost of that sprinkler system and additional things that we have to do. So I either build by residential code, or we build duplexes, or I try to build 10 units
Big
and higher.
units. Okay.
Right? But commercial construction in my market, the projects that I've finished, between soft and hard costs has come in between 140 and 150 a foot so far.
Okay.
Residential is like 100. But again, that's my market, that's my cost, that's my finishes.
Yeah,
You can do it cheaper, you can do it more expensive.
It's different everywhere. Okay, cool.
Yeah.
And then I know you've been talking forever, so there's a question that came in for me, and they asked me, hold on, where is it? Any tips for buying a flip in an area you're unfamiliar with, such as out of state? So buying a flip out of your area is really, really risky. You can do it, but I know there's also companies who claim that you can invest with them in a flip out of state. I know people who have done that, and it's turned out really, really bad. Because in general, I mean, they're marketing to people out of state to invest with them for a reason. If they're really doing good flips, if they had plenty of margin, if they're using software like Daniil's to show you how much money they're making, they should have plenty of local investors who will do that deal with them and help them. So it always sends up warning flags to me if someone has to go out of state to try and find people to invest locally. Sometimes they're trying to hide something and the numbers aren't as good. It's just very risky. So be careful with that. And then if you're actually doing the whole project out of state, finding the deals, I mean, you can do it. It's possible. But you really have to have, contractors, someone local, a manager, agent. Like, everybody's got to be local, and you've got to either have someone you trust unconditionally there to manage it for you, or you've got to be there on site to do that. So it's possible, but it's very tough. I don't know if you have anything to add to that, but it's tricky.
I like doing deals in my backyard.
Mm-hmm.
I like doing deals where I can get there quickly. I agree with everything you just said. It's very risky. You need to have people that you implicitly trust execute the deal for you, that you have a lot of trust in.
Yep. Cool.
Yeah.
All right. And this is a good question for you. This is one we were actually talking about before the call some. How do you finance your new construction? So you talked some with the bank, but then you also were telling me some other cool stuff you're doing with some of your rentals too.
Sure. So most of my new construction, a lot of the smaller deals, so like $2 million and under, I'll typically buy the land with cash, and then I will bring that land as equity to the bank instead of cash. And I will get them to finance as much of my construction budget as possible. And so we've been able to finance between, on the low end, 85 to 100% of construction budget with banks at very low interest rates. And my construction loans typically are interest only during construction, and then they roll over into what's called a mini perm, which means that I don't actually have to refi. When we get a CO and we stabilize the property and move tenants in, that loan automatically rolls over into an amortizing loan. Now I can still refi out, but I don't have to. That loan just turns into a permanent loan, essentially. And that's worked really well for me. Mark, you and I were talking about, my specs. A lot of my new construction house flips, but you're building houses to sell. That I finance out of revolving credit lines that we have with banks. I've got properties that through some financial engineering, I made free and clear, and then I have a portfolio of free and clear properties, and I have a revolving credit line against those properties, and I tap that line anytime I'm building a house, and that allows me to avoid getting construction loans or going to private money or going to hard money. So local community banks can be a great resource as long as you are, careful with your leverage, as long as you know how to build a good relationship with them. Again, I'm like the hair club for men guy, right? Like I'm not just a client. I'm not just an owner. I'm a client.
Yeah, you're not just a founder. You're a client, or yeah.
Right, something like that, right? You know what I'm talking about? They're old commercials.
Yep.
But I use this software to send presentations to my lenders, and I rely on it to be able to communicate to them why, even though I'm asking for 100% of the construction budget, it's a good deal for them, because I'm able to show them that even though you're funding 100% of my construction budget, the value of this building will be so that this loan that you're giving me is only 65% or 70% of the value. And when this loan becomes permanent, the debt coverage ratio, given the income that I'm going to generate from these rentals, is going to be really attractive for you as the lender, right? So it's all about getting what you want, but making the other party feel like they're doing well by giving you what you want. Does that make sense?
Mm-hmm. No.
And that's what we help people do. And there are downsides to using local banks versus private lenders, because typically your debt will have recourse and you'll be on the hook if something goes wrong. But if you're scaling into millions and millions of dollars of construction, you're not going to get that from private lenders. You can go and you can syndicate and you can pool multiple lenders together into deals, but there's substantial paperwork that's involved and lawyer fees. And like in the beginning of this call, I showed you guys that the 14-unit building that we finished. I was able to fund 94% of that construction budget at I have it on my wall here. I have sticky notes to hold my lender accountable. 3.45%. I funded that construction. And then at 3.45%, it rolls over into a permanent loan. Wow. So hopefully that answers your question. That was a great question.
That's great. Yeah. All right, one for me. Any regrets on getting into commercial, things you would do different starting in commercial? So for those of you who don't know, I bought residential rentals from 2010 to 2015. Stopped in 2015 because we couldn't cash flow anymore in Colorado. And then in 2017, I started buying commercial properties. And they're a little different than Daniil's. They're more straight commercial. We have a few mixed-use properties. And they've been fantastic. I love them, but there's obviously more risk involved and different things going on with them. As far as things I wish I did different, I wish I would have learned about commercial sooner is one thing. I look back at prices when I bought my first residential rentals, and commercial was so cheap around here. It was insane. But I still wish I would have bought single family to learn how it works and all that, but I wish I would have kind of had my eye on both. And then I'm trying to think. There's nothing, I don't have regrets about doing any of it. There's always things I wish I did differently. I wish I would have learned more about the smaller commercial units, how they work, and I wish I would have, I'm struggling trying to think of things I wish I did different, which I guess is a good thing.
That's a good thing.
Right.
Yeah, you don't have any regrets.
Right.
That's wonderful.
Great. We still have vacant units that I wish we had rented sooner, but I planned for that. I knew that would happen. There's some crazy weird properties I bought, but they were so cheap, and we bought a couple of them with cash that it's not the end of the world, and so I knew that would happen. And everything I buy, I make sure I get an amazing deal, So if it does go wrong, like, we're still okay. So
You make your money when you buy.
yep, that's
without
what it all
question.
starts with. So
Yeah.
all right, and let's see another question. Oh, are all of your properties in Virginia?
Yeah.
Okay, and then we kind of answered this one early on, but I'll ask it again. If you were to go back when you were 28 and first starting out, or whenever yeah, that's when you were out of the stock market stuff, would you start with SF single family, or would you start with multi-unit buildings?
No, I would have started with single family. I maybe would have bought more because the buying opportunities back in
Right.
2008 through 2012 were just unbelievable. But I learned rehabbing a house at a time, which then created a foundation for me to move into new construction fairly easily. And when I did new construction, I started with a small project, duplex, and I built a bunch of duplexes. But that built the foundation for me to build larger projects that I'm working on now. So, I don't have any regrets about starting small. It was a good foundation. It allowed me to build a real skill set and not be kind of a hobbyist.
Yep, that makes sense. And I have one for both of us here. How do you convince others to get on board with your vision and product? I know you're married, you have toddlers, but you weren't married when you first started real estate, right?
No.
So I don't know if this was, but were there other people you had to convince, or were you just like, I'm fine, I can do this on my own, I don't need anybody?
No, I mean, I don't think I really had to bring anybody on board. I mean, I was living with my parents.
Right.
And they were supportive because they're like, maybe
You'll move out, right?
Yeah. So, but my parents have always been supportive of whatever I was doing. But no, I mean, I didn't have a spouse that I had to convince. But when you have a family and you have responsibilities and you have kids, the equation changes because you are taking, I was fortunate that when I started, I had almost no living expenses and I had no responsibilities. I didn't have debt. I didn't have student loans to pay off. I didn't have a family to feed, support, children to support. I had the freedom to take a lot of risks and try to build a business and do it slow and do it correctly and take my time and build the skill set. I was not under a lot of pressure to pay bills, take care of people. The equation changes when that's where you are in life. I think you need to, if it's a spouse situation, then you need to find a way to, I'm really fond of the saying entrepreneurship is living a few years of your life like others won't, so that you can live the rest of your life like others can't.
Mm-hmm.
Right? I'm very, very fond of that saying because, for you, if you're listening to this and you have a spouse to convince or you have family responsibilities, it may be a matter of finding a way to massively cut down on your living expenses and sacrifice for a few years in order to then create a much better life for yourself down the road, 3 years, 5 years later, right? I mean, being able to, like our vision, my kids are toddlers, but in 2 years, like I want to be able to take them and live abroad for 3-6 months at a time. Like my wife and I have talked about this, and we want to be able to go and leave the country anytime we want. We want to be able to give our kids experiences of seeing the world and seeing how other cultures live and immersing, right? I mean, that truly, like in a couple of years, if I'm not living abroad somewhere for stretches at a time, and you call me a liar, Mark, like hold me accountable, right?
Mm-hmm.
But we will have that ability. We have that ability now. We will have that ability in a couple of years unless something goes wrong. And you can't do that if you're working a job. You can't do that if you're beholden to bills, beholden to debt. But to get to that kind of freedom, it takes sacrifice. So you will have to sacrifice. And if you have a family, they will likely have to sacrifice as well, because otherwise you just won't get there. Mm-hmm. So you need to sell the vision to whoever it is you need to bring on board, right? You need to sell what's on the other end of the pain and the risk and the sacrifice. and that is that we will never answer to other people again. We will never have sleepless nights about how we're going to pay bills or how we're going to pay for little Johnny's braces or little Susie's rehab. No, I'm just kidding. You know, we'll be able to take trips whenever we want. We'll be able to give our kids amazing experiences that will, because it's not about giving them shit, right? It's about giving your kids experiences that will help them become better human beings.
Right.
But to get there, you will likely have to sacrifice.
Yep.
I was a 29-year-old guy living with mom and dad, broke. That's what it took.
Yep.
My friends all had great jobs and were traveling around the world, and I was working 7 days a week in my parents' spare bedroom. And to the outside world, I probably for a while looked like a failure, and I didn't care. Like, I knew that's what it would take to be able to then create a better life for myself.
No, that's awesome.
And that's what it takes.
Yeah. And no, when I started buying rentals, I'd been doing flips and real estate before that, but I was married, and I think I bought my first rental when my wife was pregnant with twins.
Nice.
And so that's obviously not the best time in the world to buy it, but I knew that's what I wanted to do, and I told her why, and I explained the process and the deal, and I had that plan set out of why it would be a good deal. And if you can show that to other people, and they should believe in you, and especially your spouse. And if they don't, there might be some other issues there. But like if you're really passionate about it, it's what you want, you're confident. Like, it shouldn't be. It can be tough, but you should be able to get everybody on board, I think.
At the end of the day, in order for you to be a good husband and a good father, you have to feel fulfilled in your life.
Mm-hmm.
If you are coming home from a job that you hate, if you are feeling like you're missing out on something bigger in your life, if you feel like you're not living up to your full potential, if you feel like you are, you're not taking the chances that you truly want to be taking, you will not be a good spouse. You will not be a good father. You just won't, right?
Mm-hmm.
So in order for you to be the best spouse and father you can be, you need to be doing something that makes you happy, something that makes you fulfilled. If you feel like shit Monday through Friday, 9 to 6, you are not going to be a good, happy person that they need after 6 p.m. and on the weekends. You just won't. And your spouse should realize that, right? And I'm talking to women as well. If you're a woman and your spouse needs to understand that, right? We can't compartmentalize, and I'm starting to sound like a psychiatrist, but I thought about this a lot, right?
Yeah.
We can't compartmentalize different parts of our lives. If I'm doing terrible here, I'm not going to be a great father to my kids.
Mm-hmm.
I'm going to be stressed, short-tempered, unmotivated, depressed, whatever, right? So I need to kick ass here.
Yep.
In order to not just give them a great life here, but just to be a good person to them.
Mm-hmm.
At least that's how I feel.
Oh yeah, 100% agree. And I think that you ask almost anybody when they're older in life, you don't regret the things you didn't. You regret the things you didn't try.
Yeah.
You don't regret the things you tried and they didn't go your way because you never knew. You regret the things you didn't try and you don't know if you would have done good at it or not. So
that's exactly right.
Very few people regret going for things and taking chances, and just the value of knowing, that you tried is worth a ton. So, all right. We do have a lot more questions here. Let me see. There was
really coming in.
Oh, someone asked about the UK, and I get this question a lot. And I'm like, I don't know anything about UK investing. I'm sorry. I don't know if you do or not. I mean,
I know we have software clients in the UK. The software, for the most part, works just fine. Not the data part. We also have a lot of clients actually that invest in the US from the UK. But I don't know how investing works in the UK. Unfortunately,
that's how I am too.
So it's not something that we teach, and the software for the most part works there just fine. Everything is kind of currency agnostic, and there is ability in the software to toggle between square feet and square meters. So you can convert this to metric.
That's nice.
Yeah.
Okay, cool.
We've been asked for that a bunch of times, so we finally rolled it out.
We'll do a couple more, and then we've been on a long time. But I had an interesting one, too, that I just found. Did you get any historical tax credits for Eileen? Or did you get any bonuses for it as a historic building?
We got federal. That's the only way that deal. Great question. That's the only way that deal was possible. We got historic federal credits, historic state credits, and now we're actually applying for what's called enterprise zone credits, which is a local incentive for buildings where at least 33% is commercial, and it has to be in a very specific geographic area, kind of an area that's in considered economically depressed.
Mm-hmm.
So if you're building commercial spaces there and bringing businesses, they give you additional incentives. It's very powerful. Just the enterprise zone credits alone are 20% of our rehab costs over $100,000. Yeah. So the only way that deal was possible, because renovating that building was far more expensive than if we had blown it up and built from scratch.
Mm-hmm.
It was, it took 18 months. And it cost $1 per square foot far more than rebuilding that building from scratch would have cost.
Was it difficult to get those credits?
Oh, you have to apply, and the application process is just paperwork intensive, and they restrict what you can and cannot do, both on the exterior and interior. You have to maintain existing floor plans as much as you can. The entire building we had to tear down all the stucco and old siding and put back cedar siding.
Okay.
Which is the great thing about cedar siding is not only is it super expensive, it's also going to require painting in like 2 years, no matter how well you paint. So it's just a nightmare, right?
Mm-hmm.
But to get credits, we had to do that. It had these old windows, wooden windows, single pane windows that normally we could tear out and replace with vinyl or aluminum clad. We had to take those windows out, pay $600 a window to restore and paint them, including all the rope pulleys.
Oh, wow.
And then because they're single pane, we also had to then pay like $200 per storm window on the outside. So with historic tax credit projects, there is a trade-off, because you get a ton of money back via these credits, but you're spending more money to qualify. You're not spending anywhere near as much money as you're getting the credits, so it's well worth it. But there are additional things that you have to do that are just a big pain for tax credits. And we hire people to put together paperwork and take pictures and apply, because it's a lot of paperwork.
Yeah, I can
application
imagine.
process is a big pain. So, yeah.
Let's do one more where I know. Where was it? Oh, I like this question. Would you decline restaurants or commercial units in sectors you don't think are viable in your property? So I think if they mean like, are you looking at restaurants now and saying, ooh, I don't know if restaurants are going to stick around here? Or are you looking at, retail stores, like, I don't think your business is going to last into the future? How much does that affect your application process for commercial tenants?
I'm only going to do a commercial space in the location where I think a business can succeed. So there are projects that I do where, I may have to put it in commercial space because zoning requires it, but I may even go and try to get a zoning exception to where I don't have to do commercial space, because I don't think a business will be attracted or be able to succeed there. So I try to only put commercial spaces in really good locations where I think they'll get a lot of traffic and a lot of exposure and have a high chance of success. But I'm not, right now we're getting ready to put 2 restaurants in. So I'm not allergic to restaurants by any means. I think long-term restaurants are going to come roaring back.
Mm-hmm. Yep.
And the spaces that we do are small. They're typically 2,000 square feet or less. So we're putting in tenants that can have a very robust takeout operation and not necessarily a huge amount of overhead. We're not doing 6,000 square foot commercial spaces,
right.
7,000 square feet, right? This is not in a strip mall somewhere. So I'm comfortable with you still have to be selective about what restaurant goes in and what the track record is of the tenant and what their balance sheet looks like, and so we vet them carefully. But no, I mean, I'm actively shopping for restaurants right now for some of our buildings.
Awesome. Yeah, no, we have a restaurant too. They've done great. Been very flexible. And you said the same. We have had 100% of our rents too during this time. So there's one brewery that paid half in January, but I bought that during the pandemic, so I knew there might be some issues there. But that was about it. So the commercial world is not collapsing like so many people think. I mean, there's obviously some sectors that hurt, but it's not nearly as bad as the media or news will make you believe it is.
People will never not want to dine out.
Yep.
Even, I mean, watch what happens over the next couple of months as people get vaccinated.
Mm-hmm.
Restaurants are going to get hacked.
Yep.
Hacked. Long term, I'm very, very bullish. Same thing with Airbnbs. Like when COVID happened, we just launched our Airbnb units, and as they started announcing lockdowns in March, our entire schedule for March, April, May, into June got wiped out. I mean, literally, I would get notifications of a cancellation on my iPhone. Bing, 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 bing. The entire schedule got canceled.
Wow.
Like everyone. And it seemed like a terrible time. But you know what? After like 3 weeks, it started filling back up because the world evolved,
mm-hmm.
right? Now you had people that instead of taking a flight to Miami or New York, wanted to drive to a cool local town within driving distance and do a weekend trip there. Or nurses were coming into work at the hospital and needed a place to stay. And the world evolves, and things may seem like they're crashing and it's the end of the world, but very quickly things change, and it usually ends up being okay. And now our Airbnbs are almost fully booked.
Wow.
We did great last year. We were fully booked last June, July, August, and the entire fall, and we've been fully booked this spring because travel didn't die; it changed, mm-hmm. right?
Yep.
Yeah, people didn't fly, but then they drove, and they came for staycations or vacations, and things evolve. But set aside reserves if you are running a rental portfolio, if you're running whatever, if you're running any kind of business, set aside cash reserves. You should have 12 months of your living expenses and all your debt service and all of your holding costs in your properties. You should have that in an account somewhere. And it'll take potentially time to set that money aside, but man, you sleep a lot better and you're ready for anything.
Mm-hmm.
Right? So if a pandemic happens again and your tenants stop paying rent, you've got the money set aside to pay your mortgages for 12 months.
Yep.
And then you're okay.
Mm-hmm. Nope, it's so important. Well, I think that is all of the main questions we have. I had one. See, this shows how bad of a marketer I am. Someone just said, "I love your bookmark." And we're doing a sale on my books this weekend too, and I didn't even mention it. But
nice. There you go. Well, pitch your book.
Yes. So
come on.
We have 9 books now, and all
See,
of
that's what I'm saying. I don't know how you do it. Like, where do you? You've got 3 kids. How do you put out so much content? It's mind-boggling to me. Unless you have ghostwriters.
I don't. I write all of it myself. So when I first wrote my first books, I had written, 400 or 500 articles for investformore.com. And so I pulled those articles together and I put them into like a book and then formatted them all and re-edited them and added new stuff that I needed to make the book work. So it was kind of content that I already had. I just reformatted it. And then so my other books I did write from scratch, and that was a lot tougher and took a lot more time. But one thing I did for my last book, my commercial book, was I went up and stayed at the Stanley Hotel up in Estes Park for 2 days. No kids, no family, nobody but me, and I just wrote for 2 days straight. And I finished half of that book in 2 days.
That's awesome.
I'm going to do that here again soon because I've got some other stuff going on. But yeah, no. So our books are $2.99 for Kindle version right now, and then all the paperbacks are reduced 30 to 40%. They're all on Amazon, and then our Audible books are there, but we can't do anything on Audible's prices. They set them, And then the book on negotiating real estate is not on sale because Bigger Pockets publishes that too, so we can't control their pricing. But I love books because you learn so much from them. You can reach more people. They're affordable, and just reading a book like calms your mind and reduces stress so much. It's I try to read. I never read enough, but man, I always feel like I need to read more every time I sit down.
Yeah, 100%. And I've read at least 2 of your books. I think you sent me one at one point, and I mean, again, you write great, and you're gonna have to tell me how the hell you churn out so much stuff, and it remains quality.
Oh, thank you.
That's rare. So go get Mark's books.
Yep. No, and your software and stuff is amazing. I've used it before, and it's but I haven't seen all the new stuff you have, and that's like stuff that I'm like, man, I could really use that too. And I just looked at a lot the other day. I'm like, I could put a fourplex on there or something, but I haven't gone into any of the due diligence at all, like you said, for fire sprinklers and all that different stuff. And then I'm like, wait, maybe I'll just put a 10 unit on there. You know, who knows? Because there's no multifamily here for sale. And if
I'll send you a link to a good training we put out on new development that might help you. And I talk a lot about zoning there as well, and how to value land, how to figure out what you can build on it, how to model it financially. So I'll send you that, and I'll set you up with an account on the software if you want to start using it. Yeah,
no, that'd be awesome. Well, anything else you want to add before we get out of here? I know we've been here a while.
I see a couple of people signed up already.
Oh, nice.
But if you're still here and you're interested in signing up for Rehab Valuator, this is going to be the best deal that we ever make available. You can't find this. If you do Google search, you can't find this on our website. So go to rehabvaluator.com/Mark. Sign up for this. I'm not going to keep this link live very long because, again, we don't want to piss off our existing users. But this will save you 50% for the first year, and everything I just showed you on this call, you get, and more that I didn't even go into, and great support behind it, and ton of education, ton of content. So rehabvaluator.com/Mark. Go soon because I will shut this thing down.
No, awesome, and and I know you put a lot behind it, and like I don't do these with people who watch me know I hardly ever have interviews with other investors or promote other investors' stuff. It's very rare, so I only do it with people I believe in, who I trust and think are good people, and that's Daniil.
Well, I appreciate that.
And so awesome, dude. Awesome support. And really appreciate you taking the time to do this. So this is cool.
Yeah, this was fun.
And a good experiment. We'll see how it all works out here, because we'll post this on YouTube after it's done and see how that does as well. And hope you guys enjoyed it. Please leave us a comment below. Let us know. Hit the little like button too. That always helps us. And share it with your friends. And maybe we'll do this again too. Let us know if you want to do it again, or just other presentations or other subjects. Love to see that too. And thank you guys all a ton. Thank you, Daniil. And
my pleasure.
We'll go from here. All right.
Awesome. Thanks for having me, Mark.
Thank you. Now I have to figure out how to turn this off.